Hello, and welcome to this ICA in Conversation Extra that will, over the next 30 minutes, consider how we, within compliance, respond to the challenges arising from the current Middle East crisis. I'm Tim Tyler, and I'm delighted to be joined by ICA Course Director Ben Jones for this discussion. As ever, we would love to hear from you, wherever you're joining us from across the world, with your questions, challenges, observations. And you can make these using the comments on the event post within LinkedIn. I'm going to keep an eye on that, and I'll look to introduce your questions and observations as we go along. The crisis itself hardly needs introduction, but I'm mindful that some will be viewing this video as a recording and at some point in the future. So it's worth just pausing for a moment to think about what the current position is. So the conflict is, of course, escalating rapidly with US and Israeli strikes on Iran and Iranian retaliation driving a multi-front conflict across Gaza, Lebanon, the Gulf, and Iran itself. This escalation now directly fuels an energy crisis as attacks on critical energy infrastructure have rattled global markets and pushed oil prices sharply upward. So that's a brief consideration of where we are. And of course, this gives rise to a range of different compliance considerations. Ben, thank you so much for joining me for this discussion.
Thanks for
Can I start? Can I start by asking, what do you see the main areas of impact to be?
Well, I think it's really wide ranging. I think, of course, there are going to be sanctions implications, cyber threats, terrorism activities. We've also got to think about professional enablers, capital flight. I would start off, though, thinking about really the cost of living crisis and the economic factors as being the one that's going to be absolutely unavoidable. One thing to note is that energy suppliers have already pulled a lot of their fixed rate deals. Within a week of the strikes, the number of fixed rate deals for gas and oil had been withdrawn, and the ones that went back had been repriced, sometimes twice. The same thing has happened in the mortgage market. And before the war, the Bank of England was expected to cut rates in 2026. 12 o'clock today, the Bank of England have held their rate at 3.75%. We're going to see increased costs in terms of commodities, but also I think the other thing to think about is also food prices as well. A third of the world's fertilizer supply comes through the Strait of Hormuz. In America, it's the key planting season right now for corn, wheat, soybeans. They need that fertilizer for the March and April plantation. It's time sensitive. We can't delay it. Even if a vessel left the Gulf now, it would take 30 days to reach America. So I think there's going to be a real problem in terms of food supply. Is that going to mean people have to diversify what they grow? Or could it lead to a lower crop yield? So I think the cost of living and the implications on vulnerability are going to be things that we have to think about. Certainly in a few months' time, we're not going to see that price effects hitting just yet because lots of the big firms will have long-running hedged positions. But those shocks will be coming. Give it 3-6 months' time. That's where we can see real inflationary pressures.
So, of course, the world and its economy has over time become increasingly complex and integrated. And there are certain dependencies where, as you say, we're time critical. And the fallout from this is going to be felt not just within the immediate areas of oil and energy, but actually will reach into many other areas. And so far, you've touched, of course, on, well, fertilizer. I wasn't aware of that. Who would have thought, actually, that a conflict on the other side of the world could lead to potential agricultural failure 9 months from now? And of course, you've highlighted the impact on consumers and the heightened vulnerability. I guess it's a good thing that we're moving towards summer. Certainly for those of us in the northern hemisphere, I guess if you're in the southern hemisphere, you might have a slightly different perspective around this. But let's, if I may, can we start to unpack some of these in a little bit more detail? Um, One of the perhaps less obvious areas you touched upon, which I'd like to go back to now, is around professional enablers. So, by professional enablers, I'm sure most of those that are joining us will be familiar with the term, but we're talking here about clients provide a service, a process that can be misused by the corrupt, by the criminal community. But what did you have in mind when you mentioned that?
I think the headlines from last weekend, one of the headlines that really caught my attention was that Iran's new supreme leader has actually allegedly got a property portfolio in London. So somebody, an estate agent, maybe a solicitor, could have acted in the purchase of that property. So I think we're going to see obviously shifts of wealth, shifts of capital because of this situation. So the danger is to make sure that you know where that money is coming from. There was a very interesting case recently of a British accountant who was placed on the sanctions list and then removed. I think within the last month he's been removed. He set up about 5 different companies in the Marshall Islands to hold vessels. Those vessels were part of the shadow fleet. So he found himself on the UK sanctions list. He put out a statement to say, I really didn't know the business I was getting into, words to that effect, which again raises rather questions about the due diligence. But those kind of situations where people are
Yeah.
going to look to have their wealth managed, have funds managed, we really need to know where that wealth came from. So we're going to have to look through complex ownership chains, maybe offshore companies, trusts, foundations, the normal things. That's one thing to think about. I would also say, in terms of professional enablers, we've also got things like insurance, which you may not consider to be a normal run of the mill professional enabler type profession. But last October in New Zealand, there was a company called Maritime Mutual Insurance. It was owned by a UK citizen. Their offices were raided because they had facilitated billions of dollars worth of Iranian and Russian oil trade by providing insurance to vessels in the shadow fleet. Without insurance, those vessels cannot enter ports. So insurance became the critical enabler. So I think it's really going back to ensuring that your due diligence is particularly robust, looking at the typologies, looking at potential vulnerabilities, and really asking questions and being curious.
So again, we were talking about this, of course, prior to this broadcast, and I think you touched on the fact that the main inhibitor for vessels to move through the Straits of Hormuz isn't the owners, isn't although the owners may well decline at this stage for various reasons, but actually it's the insurance companies
Yeah.
that simply aren't allowing the movement of goods given the current level of risk. So that again, that was quite a surprise. Although when we pause to think about it, I guess it isn't that surprising. So again, if I can just sort of capture some of the key points, we may come under pressure, and those of us working within professional enablers may need to move quickly or be under pressure to move quickly, to move assets, to divest assets. Capital flight comes into this. The purchase and sale of property will come into this. And of course, the danger is that when we're under pressure, when we need to move quickly, that our standards will diminish. Can I go back to that question of the supply chain, which we touched on? a little while ago. Of course, they're coming under quite significant pressure, and companies around the world will be scrambling to look at alternative sources. What's the compliance challenge that's buried within this, that's carried within this?
I think there'll be a pressure from front office to pivot very quickly to find alternative suppliers. The question is the is the due diligence going to be maintained at the same level? There could be a temptation to enter into contracts very quickly without looking at the ESG implications. So I think the problem could be desperately trying to find alternatives in a very
Mm.
short space of time. There's going to be real commercial pressure. I remember with Ukraine, when Russia cut off the supply of gas to Ukraine, the new trade route was for Ukraine to buy gas from Germany that had come from Russia. And we saw loads of companies mushrooming in Ukraine very quickly to try and buy this gas. Some of them had nominees, they didn't want to reveal their beneficial ownership, but it was also a challenge to understand who these people really are. It's a newly created company. So those are going to be the challenges. There could be lots of onboarding that needs to take place in a very short space of time. There could be remediation because companies maybe have to change their nature of business slightly. So there'll be lots of challenges, I think, on due diligence. The question is whether or not the standards can be maintained and we can get the ownership structures. We really know who's behind these companies. We're happy with all the risks. Have we uncovered those risks? And
So I think another really good case to point towards is what happened at the time of COVID,
yeah,
where we saw, didn't we, that in many countries around the world, including the UK, we were scrambling for personal protective equipment and a range of other health-related supplies. And due diligence either wasn't taking place, or it was taking place to an inadequate standard. And it took years for the fallout to really be delivered. So we've seen this before, certainly.
yeah, absolutely. When companies are newly formed, like we saw with COVID, you haven't got that background record. You don't really know the reputation of the company. And the due diligence that was performed was cursory. To put it, it's most charitable, really.
Yes.
Loans were going out to companies who were completely illegible to apply. So I think these are the
Yeah.
pressures for finding new relationships at this time.
One of the things we did see, of course, at the time of the COVID outbreak was governments were stepping in to support business. And there's an interesting question that's come up from Angel, who asks, well, do we think that subsidies and tax exemptions could work in the context of the war? So I take it that what Angel is driving at here is ways in which governments might step in to lift pressure from businesses as they navigate through, sorry, navigate might be the wrong choice of words, but as they work their way through the current crisis.
Yeah, I think it will obviously depend on what the government can do. One of the interesting things is that China has been stockpiling oil for some time. It's not allowing oil to go out the country. So there will be different pressures. I think the government will probably look to cut certain taxes as the oil price goes up. But again, it will be something that will have some effect, but I think it won't protect the economy from the kind of economic shocks that could be happening in 3 or 6 months' time. It will be a help, but I'm not quite sure the effect of those kind.
And, and that itself, of course, might give rise to other compliance considerations. You mentioned, didn't you, the number of companies that sprung up, mushroomed in the Ukraine. That was because of a change in the supply chain around oil and energy. But once again, though, we find that that kind of subsidy will lead to new companies being formed, if nothing else, to exploit those kinds of subsidies. And we saw that in large amount at the time of COVID.
Yeah, absolutely. That's one thing I think is very, very hard to get this right. We saw that in COVID, where the government eventually responded, but billions and billions of pounds were wasted. I think it could be the government could be quite reluctant in terms of the subsidies that are available to them. I'm not quite sure how much money they will have available.
Mm.
Any tax cut is obviously going to increase the deficit. So I'm sure there'll be some activity, but I think it will be quite limited to the effects it can have.
Okay, so can we perhaps now think about the more obvious areas that many of us within compliance will be very familiar with: sanctions linking to proliferation financing and terrorist financing. There is, of course, the danger that we're kind of stating the obvious, but there are going to be enhanced sanctions risks. Are we seeing much movement in the sanctions risk we face, and in the nature of sanctions that are being raised at the moment?
There have been some changes. I mean, the Trump administration has continued to issue sanctions over the past few weeks. I think really the one slight change we can see in terms of patterns is in terms of some of the targets, especially in terms of the sanctions circumvention to do with capital flights. What we've seen crypto be utilized by the Iranian regime. I think there was about a 700% increase on the Iranian crypto exchange the moment we saw the first airstrikes. FinCEN put out something last October to say that it's identified about 9 billion US dollars worth of financial flows coming from Iran linked to the shadow banking network. These are going through front companies, they're going through investments, but we've also seen them come to the US and the UK. The typology that FinCEN identified is that many of these movements involved accounts originating in Hong Kong and China. But I think one of the key things is the US also sanctioned two UK based crypto exchanges in January this year because they were linked to sanctions circumvention. So I think in terms of the enforcement approach, we're going to see a move away from targeting individual wallets to looking at the infrastructure, the exchanges, the stablecoin corridors, the liquidity hubs, places like Dubai, Istanbul, which have been associated with money from Iran and Russia for some time. So I think those kind of that kind of shift in enforcement is going to be really the theme that will develop now in terms of like crypto and
And this, of course, comes at an interesting time, given that, well, those of us that are joining from VASPs, virtual asset service providers, and other businesses that are involved in the crypto ecosphere, if I can use that term, well, it's relatively immature. We're starting to build capability, regulatory understanding, and awareness of what the requirements are, but it's still relatively early days. And here we've got a huge challenge where we're seeing potential capital flight. We're seeing the Iranian and potentially other regimes looking to offset some of their risk by moving it into crypto assets, and of course, use crypto assets in order to acquire weapons. And we know that, for instance, North Korea has long been doing this. So there's a different type of risk that we face in this space, and an escalation of it.
yeah, absolutely. And I mean, the standard things for financial institutions to look out for is the sudden cross-border activity, unusual cash deposits, transactions from border areas. But I expect to see a significant capital flow towards London because expats are going to be leaving the Middle East. They're going to be returning to the UK. So I think there's going to be a real test
Yeah.
for banks in the UK to actually ensure the money that they've received is genuine. They can account for it, but it's going to be quite. I can imagine there being quite a high demand for new accounts as we see people repatriate to the UK.
Yeah. No, that makes sense, certainly. Terrorist financing, then, of course, this links closely to what we've already been talking about. Um, and I think embedded within the question is an assumption that the Iranian regime or elements of it are themselves designated as a terrorist organization, which again could be challenged. We're not here to discuss that, but that's an interesting issue. How do you see this evolving at the moment? And what sorts of steps can we take in order to manage the risks better?
I think in terms of terrorism, we're looking at really two distinct threats. The threat from lone actors, and we've already seen shootings in Texas and Virginia after the bombing campaign. We've seen somebody in Michigan attempt to drive a car full of explosives into a synagogue. I think Belgium also saw an attack of against a synagogue there. So we've got those lone actor type
Yes.
threats, but we've also got the state directed operations. We know that Iran has long extended its influence in the area by backing paramilitary groups. We've got Yemen's Houthi movement that's attacked vessels in the Red Sea. We've got Hezbollah in Lebanon that's been very active. And we've got Hamas that's been a major recipient of Iranian military support. I think this is something we're going to have to be very, very mindful of. In the UK yesterday, two people were charged with carrying out surveillance on Jewish groups for
Mm.
Israeli Iranian intelligence. So I think those state actor threats, especially by using proxies. This is a method that Russia started to use with Ukraine, recruiting operatives on Telegram or another app to carry out arson attacks in the UK against, for example, Ukrainian supply chains. So I think there could be a real danger of Iran using this method. Transaction monitoring can help, but again, against lone actors, I think the London Bridge attack in 2017 and 18, they're very low cost attack.
Yeah.
It doesn't
Yeah.
require an awful lot of finance to have a devastating impact. So I think vehicles could be used in attacks. We've got to keep vigilant, but in
Of
terms
course.
of the banking sector, we're looking for those anomalies. Do we see any patterns for maybe countries, intermediary countries,
Yeah.
those kind of things to watch out for, and also transactions near, obviously, country borders that are in the conflict zone. But right now, there'll be so many people relocating from the Middle East back to their countries. We're going to see a heightened level of transactional activity anyway. So I think it's going to
Yes.
be quite challenging for banks and
So
financial.
these are really good points, and I think you touched on this, but it's worth just amplifying for a moment. Part of the conflict may extend from traditional military into cyberspace,
Yes.
and this, of course, increases the cyber threat to businesses, to military, to government departments around the world.
Yes, absolutely. I mean, Iran doesn't have the same cyber capabilities that Russia or China has, but it has carried out a number of attacks over the last decade. I think it wiped a server that belonged to Saudi Aramco. It had some attack against a casino in America, but it has managed to conduct quite a few distributed denial of service attacks, DDoS
Yeah.
attacks
Yes.
against American financial institutions. I would say the threat hasn't dispersed, it hasn't disappeared, but it's dispersed. So the airstrikes will have degraded Iran's capability to do this. But then again, we can see state aligned cyber units who can act in isolation. There has been one attack so far on an American technology company. They were hit with a cyber attack. and that has got ties to Iran's intelligence. That's caused a global outage, and when I was looking yesterday, I think that company still isn't online. So it's certainly possible, and the primary targets are going to be critical infrastructure, banking, aerospace, defense, logistics, healthcare, cloud computing as well. I think we've
Yeah.
seen an Iranian missile strike on computer servers in the Middle East as well. It knows our critical infrastructure, all of which are going to be targets for cyber attacks.
So we've got some interesting observations and questions. Anna asks a highly geopolitical question. Do you think Russia is getting richer now? And there is a lot of suggestion to lot to suggest that maybe Russia is one of the beneficiaries of the current conflict. If nothing else, it's taking our eyes away from what's happening in the Ukraine. Um, I think we probably could talk about that for some time, and it's likely to divide opinion. But can I move on to David? David's interesting question, with a particular focus, I think, on the UAE. So, um, the David observes that given that regulators for two of the Gulf offshore centres, and he's looking at the DFSA and the QFCRA, were set up 24 and 20 years ago by senior British regulators. And many staff are Western expats. They're now very worried about their own security. What will be the impact on these successful offshore centres? So I think what's contained within that is the inference that there is a dependence on expats within those centres. I know I've been talking to one or two of these centres in the Emirates myself. And although they've got very sophisticated capability, I think it's reasonable to ask what is going to be the impact as expats maybe are looking to return home.
Yes, indeed. I was speaking to a woman in Dubai this morning, and she was telling me about how things have changed there. I think one of the features of this war is whilst the Gulf does have some very sophisticated weapons, it's got Patriot missiles. These Patriot missiles cost, I don't know, $3 million every
Yeah,
time one's fired, and they're shooting down Iranian drones, which are maybe tens of thousands, maybe less. So they're shooting down very unsophisticated missiles, but the amount of churn, it's the financial churn, the money that's being going, that's being used to actually defend Dubai is it's very it's unsustainable.
yes.
So
So it's an asymmetric war in that sense,
yeah,
isn't it? I'm very mindful of the time. We're coming up to well, 2 o'clock locally here in the UK, but to the hour wherever we are in the world. Um, Azine, thank you for your observation. The IRGC has still contacts in the West, especially with funding many institutions. There needs to be stronger internal regulation coming from the UK as well. So I think that's quite a general recognition of some of the pressures that we've been talking about. But as we start to move towards a close, very quick summary. We've touched on those many areas that we expected to. We've talked about the supply chain. We've talked about professional enablers, capital flight, divestment of property and other portfolios. We've talked about sanctions and how that is changing terrorism, the terrorist threat, and of course, part of that, our role in countering it through counter-terrorist financing. We've thought about crypto in particular, where we're seeing significant amounts of wealth being displaced to, and the challenges that that entails. And we've thought about cyber, recognizing that there is a pattern here, and it's reasonable to anticipate that there will be sustained cyber threat. Can I invite you, Ben, as we draw this to a close? On the one hand, I want to ask what are your final thoughts, but also I'm really keen to leave us all with some clear thoughts about what we should be doing, what we should be paying attention to for those of us working within compliance. So can I wrap those two questions up in this for your closing considerations?
I think it will be revising the business-wide risk assessments that we have, thinking about. I mean, our screening should be it should have been calibrated long ago, but making sure that's working as we intend it to, and also think about customer vulnerability, because I think that will be one of the hot topics in about 3 or 6 months' time.
Okay, Ben, it's good advice. Thank you. Thank you very much for joining me today. And wherever you are in the world, thank you for joining us, for your comments and your thoughts. Again, thank you. And Ben, just to finish, I think you're hosting In Conversation next week, where you're going to be talking to Andy Clark, a former police officer, and you're going to be considering professional enablers, and in particular, some of the vulnerabilities that that gives rise to. For the moment, though, wherever we are in the world, thank you so much for joining us, and do take care. Bye-bye.